Hello and welcome to Investflow. Today we'll be looking at Alphabet, better known as Google, one of the biggest companies in the world and one from which we probably use products every day. But is it also a good investment? Let's find out. Alphabet, ticker symbol GOOG or Google, is currently around 1.7 billion market cap. It currently employs 156,000 people. They were founded as Google in 1998 and rebranded as a holding company called Alphabet in 2015. Since 2015, Sundar Pichai also is the CEO of the company. They are headquartered in Mountain View and are in the technology sector. If you're wondering why Alphabet has two different ticker symbols, one of these is for the Alphabet A and one for the Alphabet C shares. They in total have three different types of shares, but you can only publicly invest in A or C shares. And the only difference is voting rights, which for most investors don't really matter, at least for small individual investors. If we take a look at the share price, we can see that Alphabet was a pretty good success story in the last 5 years. The stock went up over 200% at the peak before the Tec Correction, almost 250%. The stock looks pretty expensive from a share price perspective at over $2,000. And that also is why Alphabet will be doing a 1-to-20 share split in the second half of the year. So if you look at the stock in half a year, you will probably see share prices of around 120, 150 euros, dollars or so. So don't be surprised about that. If we take a look at the ownership structure, we see nothing really interesting here, just the normal big investors like Vanguard, T. Rowe Price and BlackRock. So yeah, just the big institutional investors that are in Alphabet for the most part. If we take a look at current analyst ratings, we can see that everybody has at least a hold rating, but most have overweight or buy ratings. The lowest target for Alphabet is $2,930, which still has an upside potential of 9%. And the highest price target is with 3,900 at even 45% upside. So we can see that all analysts are pretty bullish on Alphabet. Let's take a look at the different business segments and product Alphabet has to offer. The best known product Alphabet has is their search engine, Google Search. It is by far the most used search engine in the world. As you can see in this chart, they have around 92% market share, with competitors like Bing, Yahoo and Baidu in China having pretty small parts of the whole market. Google Search is ranked number 2 for the most visited websites in the world. It used to be rank 1 for the most time, but recently TikTok overtook it for the number 1. Google Search has around about 6 billion searches every day, which is just astounding to think about. In the last year, they had over 2 trillion searches. A lot of people call Google Search as the best business in the world. That is because with all the data they collect for pretty much all people on the planet that use the internet, they can do extremely accurate models for each person and can do extremely well-suited ads for everybody. Another almost monopolistic business Alphabet has is Android. Around 290 million Android smartphones are sold every single quarter, so that makes for over 1 billion Android smartphones being sold every year on average. As we can see, the market share for Android has steadily increased from around 25% in 2012 to around 70% nowadays. If we take a look at the different nations and their distribution between iOS and Android, we can see that only Japan and the US have a majority in Android, and the rest of the world are pretty much dominated by Android. In some extreme cases like low income and developing countries like India or Nigeria, we have over 90% market share. Another fast growing segment for Alphabet is the cloud. Here they are not the market leader though. As you can see down here, the market leaders are Amazon with AWS with around 32% market share, Microsoft Azure, which is growing rapidly and is already at over 20% market share. And Google Cloud is also growing fast, but they are still around 8% of the market share. A lot of different players are in this market, so others also have with 40% the largest piece of the pie. What Google Cloud platforms makes so interesting is that they can offer, besides just the normal cloud storage and cloud computing, they can offer a lot of different services like big data analysis and machine learning applications. So pretty much the great thing with cloud solutions for businesses is that they have a pretty great lock-in effect. A lot of these different applications are specially designed for Google Cloud. So once a company switches to the cloud, they will have their software division create customized software for the use case on Google Cloud. And if they want to switch, they will have to migrate the code to another language potentially. They will use other software from, for example, Azure or AWS. So there are very high switching costs, which makes the cloud very interesting and potentially insanely profitable down the road. A less known business venture of Alphabet is Capital G, which is their investment arm, which has around 3 billion under management. They invest in a lot of up and coming companies like Stripe, Duolingo, UiPath, or Airbnb, and participated in 16 IPOs to date. Alphabet spends a lot of money in other bets, like for example the Capital G, but also business ventures like Waymo. They spend a lot of money here to try to get to the next big thing. Waymo, for example, is their autonomous driving venture, where they have Waymo Driver, which will help people drive autonomously, and which already has millions of miles on public roads and billions more in simulations in the data profile. They also have Waymo One, which is a ride-hailing service which already is operational in Phoenix and which pretty much gets people from where they want to go every day at the moment. They also have Waymo Via, which is focused on the transportation of commercial goods, so pretty much autonomous driving trucks, which could also be a very interesting topic in the future. We take a look at the long way that Waymo has come so far. We can see that they started in 2009 already and had the first fully autonomous ride on public roads already in 2015. And now they come all the way to starting their Waymo Via in Texas and New Mexico, and have already a fully autonomous ride-hailing service in Phoenix nowadays. The question is, can they prevail in this highly competitive market with a lot of big companies like Tesla and Amazon also competing? The, in my opinion, most interesting other bet for Alphabet is DeepMind. DeepMind is their artificial intelligence arm. They have some very impressive achievements under their belt already. For example, in March of 2016, they managed to beat the Go champion in a game of Go, which is by many considered to be one of the most complicated games of all time. They also have ventures like AlphaCode, which pretty much generates code on the go and is a great tool for developers to pretty much let the AI do the coding. Another one of Alphabet's ventures is YouTube, a product which we are all using, obviously. YouTube in 2021 managed to have a larger revenue than Netflix and is also growing faster, which is just mind-blowing in my opinion. YouTube has some very impressive stats, like for example, the total amount of videos watched every day by hour is over 1 billion. And the number of watched videos per day is around 5 billion. Every minute, 500 hours of videos are uploaded. So in my opinion, YouTube is just the most impressive streaming service and content provider in the world. So pretty impressive that it's just one of the ventures Alphabet has, and which they initially acquired for only 1 billion around 15 years ago or so. Before I continue to dive into the numbers, I would kindly ask you to thumbs up the video, subscribe to my channel, and comment down below if you like the company, if you maybe already invested, and in general how you like the video. Let's take a look at the last full year results for Alphabet. We can see that they managed to grow revenue by over 41%, which is just astonishing considering they grew from a base of already 182 billion all the way over 250 billion. On the net income side, they managed to grow it even faster to around 76 billion, which is a change of 88% year over year. The free cash flow grew a little bit slower, but still at an astounding 56% rate at a 67 billion. The EBIT was a little bit under 80 billion, which represents a 85% change. The equity grew 13% to 251 billion. The equity ratio with that is 70%, which is pretty much stagnant, but very high with 70%. The return on equity on this high equity ratio of 70% is 30%, which is just stunning. In general, I want to look for companies with an return on equity of at least 20%. So Alphabet does check that checkbox too. If we take a look at the valuation metrics for Alphabet, we can see that the trailing and the forward PE ratio is around 23, which is a lot under their 5-year average of 33 or 27. The price to sales ratio is a little above the 5-year average with around 7. The price to cash flow is also around the average. The PEG ratio is a lot under the average with a ratio of 1.2. And the Petrovsky F-score, which is a score that measures the financial standing of the company, is at an astounding 8.9% for this year, which is a lot above the 6 average over the last 5 years. Looking at the last 5 years, we can see a very nice staircase for the revenue, which grew over 130% over the last 5 years. But we can also see a very big jump in 2021. The same thing can be observed in the net income part, where the growth was astounding with almost 500% over the last 5 years. So we can see with growing revenues, Alphabet is managing to increase margin, and that by a lot. We can also see that this insanely high 88% jump in net income is not the norm, obviously, for Alphabet, and 2021 was extremely good here. Alphabet does not pay a dividend, but they do offer increasing share buybacks. They started buying back stocks around 2015 with a very low buyback yield, but they kept increasing it and are now at almost a 3% buyback yield, which is pretty much, in my opinion, the better alternative to dividends. So I love to see that from Alphabet. If we take a look at the revenue pie, we can see that the largest part with almost 60% is Google Search. The second and third and fourth largest parts are YouTube, Google Network and Google Others with around 11 to 12%. The cloud contributes 7% and the other bets contribute 9%. What should be noted though is that Google Search, Google Others, Google Network and YouTube are all advertisement revenue though. So they are less diversified from their revenue streams than it looks here. The only really different revenue stream is the cloud, which is not advertising. Alphabet has a pretty decent revenue distribution between regions, with no region accounting for more than 50%. If we take a look at the debt situation for Alphabet, we can see that they don't have financial debt, and they are sitting on a insanely high 125 billion of net cash. This is on the one hand good, but on the other hand also one of my biggest negative points about Alphabet. They are sitting on so much cash and they are really not doing anything with it besides buybacks and some reinvestment. But these 125 billion are doing nothing there and sitting there without generating anything. So I would appreciate if they would start either increasing the buybacks or maybe starting to make some big acquisitions like we can see out of Microsoft, which had the same problem for the longest time. but now they're doing big deals like the Activision Blizzard acquisition. So yeah, let's see if Google can change that going forward. On the debt to equity ratio, we can see similarly good things. We have 107 billion in liabilities and 250 billion in equity, which leaves us with a low 43% ratio, which is well below our 200% guideline. Looking at the guidance for the next 2 years, we can see that Alphabet is expected to grow their revenues a lot again, growing from 250 billion all the way to 400 billion. The EBITDA is expected to grow from 106 billion to around 160 billion, while the operating profit is expected to go from 78 to around 120 billion. This would pretty much be in line with their 30% operating margin. The net income margin would decrease a little from the very exuberant 2021 number of 29% down to a more reasonable 25% net income margin. So let's summarize Alphabet. They have multiple monopolistic businesses like Google Search or Android. Some would even consider YouTube in some sort of monopoly. They do have still high growth rates, even though they are already at such a high base level they're coming from with over 250 billion in revenue. They have strong margins with around a 25% net income margin going forward. They have many big bets in their portfolio, which they are constantly pouring more money into to try to find the next big thing. On the other hand, though, they are often criticized, especially with the whole data collection and generally a lot of bad press about them. They are currently still heavily dependent on advertising, with everything besides other bets and cloud, which only accounts for around 8% of the revenue being advertisement driven. And they also have too much net cash on the balance sheet for my liking, with around $125 billion that don't do anything and just lose money to value to inflation. Let's take a look at the moat for Alphabet. On a technology scale, we think they have a pretty decent moat, but not the best moat because they do have competitors with at least similar technology, even though they don't have the same market share. On a brand level, they are top tier in my opinion because Google is a very strong brand, one of the biggest brands on the planet. Also things like YouTube and Android, just enormous brands that nothing really compares to. And on experience, since they are operating since 1998, they have very much experience in a lot of different segments. They are leaders in many segments, so yeah, the best rating there as well. So let's take a look at my outlook for Alphabet or Google. They currently have many growth drivers besides Google Search, which was a problem for the longest time. But now they have ventures like YouTube or the cloud, which are growing enormously fast. They have a lot of segments and pretty much all of them are extremely high margin businesses. They have enormous cash holdings, which depending on your interpretation can be good or bad. I personally don't like it, but it also gives them a security, and if we do get into a big recession or something like that, they could have some very interesting acquisition targets, and in general it would be interesting to see what they do with the cash then. They are currently very attractively valued in my opinion, and they also announced a stock split for July, which will bring the pretty high dollar stock price down from around little under 3,000 to more like $150. They are in a lot of negative headlines though about market abuse and general bad competition against their competitors. And as you probably figured already, I like Google a lot, and it's around 5% of my personal investing portfolio. And I want to grow that allocation even more to around 8% since it's one of my highest convictions at all, even though it's already such a big company. So obviously I do see a substantial and also sustainable upside potential from here. So I hope you like this stock analysis of Alphabet. If you did, please once again consider liking, subscribing, and sharing your thoughts in a comment down below. Do you own Alphabet? What do you think about it? Or maybe just in general how you like the video. Still looking to learn and do better videos in the future. So thanks for watching and see ya.